My dear students, Assalamu alaikum. In this lecture, we will learn how to measure national income with the help of expenditure approach. Dear students, in our previous lecture, we discussed the income method of measuring national income, and according to income method, as we already discussed in our previous lecture, national income is equal to the sum of incomes generated by factors of production in the production process during an accounting year. The income generated and earned by factors of production during production process is finally spent in the form of expenditure on purchase of goods and services produced by firms or business units. Expenditure method is thus the method which measures national income as sum of final expenditures incurred by households, by business firms, government, and by foreigners during a year. This total final expenditure by all the entities during an accounting year is equal to gross domestic product at market price. Thus, under expenditure method, national income is measured at the point of actual expenditure, and this method is also known as income disposal method. Students, it must be noted that under expenditure method, we take sum of final expenditures on consumption and investment during a period of account. What is final expenditure? Dear students, final expenditure is the expenditure made on purchase of domestically produced goods and services for final use. Or in other words, we can say that final expenditure refers to expenditure on final goods and services in a year. If an enterprise uses goods purchased from other enterprises or for resale or as raw material, the expenditure on such goods will be called as intermediate expenditure. On the other hand, if goods and services are produced for final consumption, and the expenditure on final goods and services is called the final expenditure. In order to calculate national income by using the expenditure method, firstly we have to identify the economic units incurring final expenditure. Dear students, all the economic units which incur final expenditure within the domestic territory are classified under four heads. Number first is the household sector. Number second is the producing sector, or we can say the business sector. Number third is the government sector. And number fourth is the rest of world sector, or we can say the foreign sector. After the identification of economic units, the second step is to classify the final expenditure incurred by different economic units into various heads. C. Expenditure can be made by private individuals, by households, by government, or by business enterprises. Further, people of foreign countries spend on the goods and services which a country exports to them. Similarly, people of a country spend on imports of goods and services from other countries. We thus add up the different types of expenditures incurred by households, by government, by business firms, as well as by rest of world to obtain national income. So the various components of final expenditures are: first, component is the private final consumption expenditure. Students, private final consumption expenditure refers to expenditure on final goods and services by individuals, households, and non-profit organizations. Private final expenditure, or we can say the private final consumption expenditure, includes expenses incurred by individuals residing within the domestic territory or abroad. For example, expenses made by residents of a country during their foreign travel will also be added in private consumption expenditure. However, it does not include any expenses incurred by non residents and foreign visitors in the domestic market. Second important component of final expenditure is government final consumption expenditure. Government final consumption expenditure refers to expenditure on final goods and services by government, like government spends on various administrative services, on defense, law and order, education, healthcare, etc. Third component is the investment expenditure. Investment expenditure refers to the expenditure incurred by production units or business firms for raising the capital stock of the economy. Investment expenditure includes fixed investment, which is also known as gross fixed capital formation. This type of expenditure refers to the expenditure incurred on purchase of fixed assets, such as on the purchase of new plants, machinery, equipments, etc. Investment expenditure also includes inventory investment, which refers to the physical change in the stock of raw materials, semi-finished goods, and finished goods lying with the producers. It's included as an investment item because it represents the goods produced but not used for current consumption. It is calculated as the difference between the closing stock and the opening stock of the year. The last component of final expenditure is net exports, which refers to the difference between exports and imports of a country during a period of 1 year. Students, exports refers to the expenditure by foreigners on purchase of domestically produced goods. The exported goods have been produced within the country's domestic territory, so they are included in output of an economy. Imports, on the other hand, is the expenditure incurred by residents on foreign products. Since imports are not produced within the domestic territory of a country, they are deducted to obtain domestic product. Dear students, in order to estimate national income by using the expenditure approach, we adapt these four components of final expenditure. The sum total of four types of final expenditure gives us gross domestic product at market price. Thus, gross domestic product at market price is equal to private final consumption expenditure plus government final consumption expenditure plus investment expenditure plus net exports. On deducting depreciation charges from gross domestic product at market price, we get net domestic product at market price. We then subtract net indirect taxes, which is equal to indirect taxes minus subsidies from net domestic product at market price. to arrive at net domestic product at factor cost. And finally, we add net factor income earned from abroad to net domestic product at factor cost to obtain net national product at factor cost, which is called national income. Dear students, various precautions need to be taken for correct estimation of national income by using the expenditure method, like expenditure on second hand goods should be excluded. It is because such expenditure on the goods is not considered to be expenditure on currently produced goods. Or we can say that such expenditure has already been included when they were originally purchased. Moreover, expenditure on the purchase of new or old shares and bonds should be excluded from the estimation of national income because they are not payment for goods and services. These financial assets are mere paper claims, or we can say financial claims, and they involve a change of title only. Another precaution which needs to be taken while calculating the national income by using the expenditure method is government expenditure in the form of transfer payments such as unemployment allowances, scholarships, widow pensions, old age pensions, etc., should be excluded from the calculation of national income because these payments do not make any contribution to the flow of goods and services, which means that no productive service is rendered by the recipients in exchange. And finally, expenditure on intermediate goods and services should be excluded from the estimation of national income. Otherwise, this will lead to the problem of double counting, as it is already included in the value of final expenditure. If it is included again, it will lead to double counting of expenditures. Thank you.